Welcome once again to the Biz Life Podcast, broadcasting live from UNR Extension Studios in lovely Las Vegas, Nevada. I'm Mike Bindrup, and we're here with the Small Business Education Program. Today we're going to be talking about insurance, and we have our special guest, Mr. Brandon Zobrist. Thank you for joining us today, Brandon.
Hey, you're welcome.
And Brandon, you're with Schwartz, Manning and Associates. Tell us about your company.
So Schwartz, Manning and Associates, we are a independent agency brokerage here in Las Vegas. We have offices in Utah, Nevada, and California.
Cool.
Mm-hmm. We are primarily a commercial broker.
Mm-hmm.
We do have a benefits division. We sell all kinds of insurance, from life insurance, property and casualty, health insurance, group medical, anything, you name it, we can find it and buy it for you.
Perfect.
Yeah.
That sounds good. Well, we have a bunch of insurance questions for you today. So let's talk about small businesses and what type of insurance do you just need, no matter what type of business. What do you recommend?
So the main thing that you're going to need is general liability insurance.
Mm-hmm.
That is the number one insurance that most businesses need to have. And that is going to protect you in the event of a lawsuit or any type of damage that is caused to other people.
Okay.
Whether it be financially, personal injury, anything that happens, slip and fall, premises liability. Liability is basically insurance that covers you for damage to any other people.
Okay.
Okay.
Gotcha.
And then on the other side of that, we try to couple that with property insurance.
Mm-hmm.
Okay. And that usually covers buildings or any type of location that has a monetary value.
Okay. So say if I'm I have a building that we do business in, but I also I own a couple of rental properties. I'd probably need something a little bit more to cover the rental properties, correct?
Yeah, it can work that way. It all depends. So you buy insurance with the entity. I mean, if it's the same entity that owns rental properties that owns your building, then yeah, you could put those together. You could package
that into one policy. Then.
That's correct.
Okay.
Yeah, and that would include a liability side and it would include a property side.
All right. Nice. Now I know a lot of home-based businesses. Sometimes they'll say, "Well, I have insurance for my homeowner's insurance, and I have this umbrella policy that covers certain things. So I'm covered, right, Mike?" So Brandon, are you actually covered? What do you recommend with somebody who has a home-based business?
Well, that depends on who owns your home. If you personally own your home,
Okay.
then your insurance covers you personally. But if you're talking about your business, that is separate.
It's a different thing.
It's a different animal.
Okay.
Yeah. So typically with your home insurance, you're going to have a personal liability limit that comes with that.
Okay.
And usually they formulate that based on the value of your home and what you could potentially be liable for.
Okay. Gotcha.
Okay. So with your business, you carry general liability, which is going to help you cover if anybody becomes damaged throughout the course of your business.
Okay.
Okay.
So general liability handles accidents pretty much. Slip and falls.
That's correct.
Stuff that happens where you're not negligent or...
Well, and it does extend a little bit beyond that.
Mm-hmm.
So like in the case of a contractor, you're going to have what's called completed ops coverage, and that will cover your work because you're not going to stay there and protect your work after it's installed.
True.
You know, if you build a home, that's going to cover any injuries that come if that home collapses on top of somebody.
Okay. So completed ops. What other types of specialty insurance do business owners sometimes seek out?
Yeah, so it depends on the type of business. I mean, obviously you have people that operate in a professional capacity, like a doctor carries medical malpractice insurance.
Mm-hmm.
Lawyers will carry what's called professional liability insurance.
Okay.
And that covers them throughout the course of them acting as an attorney.
Okay.
Professional liability also can be written for other types of...
It's like malpractice, but for attorneys.
For attorneys, for mortgage brokers, for anybody that operates in a professional capacity.
Gotcha. Okay.
So yeah.
Interesting.
It's also called E&O insurance. Same thing.
Error and omissions insurance.
Errors and omissions insurance.
That's the same type of thing. Okay.
That's right.
So it's professional liability.
That's right.
Okay.
That's right. So we as insurance agents, we carry errors and omissions insurance, professional liability.
Okay.
Because if we screw anything up, we have a policy there that covers,
It covers
us. just like anybody else. That's right.
That's awesome. Now, we were talking before the show about a lot of stuff, but we were talking about different policy for like a key person that you have employed for you. Can you talk a little bit about that?
Yeah. So there's a product out there called Key Man Insurance, and usually that's coupled with what's called a buy-sell agreement. So in a partnership, the business will usually purchase life insurance on those key individuals that operate the business.
Okay.
Usually it would be the owner. Okay. Key Man Insurance is going to cover with, in case that person dies, it will pay the business, the beneficiary. The business would be the beneficiary. Sometimes that is altered a little bit to where the spouse can be involved in that as well.
Yes.
Those buy-sell agreements will direct the business on what happens when one of the partners is no longer there. That's right.
We were talking about this. We had an attorney on, an estate planning attorney, and we kind of delved into this a little bit. And we talked about sometimes in a partnership, you can have, if you're married, we're a community property state, right? So pretty much everything that's yours, your spouse is entitled to your share. And if you get divorced, they're entitled to half of it too. So you have to stipulate in your operating agreement whether they can come in and they have voting rights or they can do anything with the business. But quite often, Key Man Insurance is used to pay off the spouse in the event of their untimely death. And it can be good because it gets them out of the operation of that.
Yes.
And it's something that's...
but that needs to be specified.
It has to be specified
in the operating agreement.
Yeah.
Okay.
See, that's where it gets tricky. You have to do that.
Yeah. Well, I mean, and that's where a good attorney will help you out. But that is done through the product of life insurance.
Absolutely.
Okay? So it's basically a life insurance product, but it's written in a way that the beneficiary is usually the business. And a lot of times that buy-sell agreement will say, okay, if one person expires, now we're using this life insurance money to buy out the remaining spouse.
Gotcha.
or whoever that person's equity as the business
So
is.
you work with attorneys normally to make sure that this happens, right?
Typically, we'll get referred to by attorneys.
Okay.
A lot of times, though, we work with businesses, and that's something that we bring to the table to them to say, do you have this in place? And if they don't, we will work with their attorney, or we will bring an attorney that can help draft with that legal documentation.
Okay, that makes good sense.
We'll take care of the policy. The lawyer will take care of the legal documents.
Gotcha. Okay, good. All right, what's a bond? And how is bonding different than insurance? You'll often see people that say, especially in trades, cleaning, construction, will say licensed and bonded. What does that mean?
So bonding is different than insurance. Okay, bonding is where you transfer your ability to execute something to the bonding company. The bonding company basically backs you up and says, listen, this person is going to take care of their obligations. The most common type of bond that we use is a payment and performance bond.
Okay.
And that's mostly done in the construction industry.
Gotcha.
Where if there's a large project that happens and it requires a bond, the bonding company will certify that the contractor performing the job is capable and financially capable of doing the job for this agreed set upon price.
Gotcha. Okay.
So the bond it's not insurance because it doesn't cover liability. It doesn't cover for personal
Has nothing
injury.
to do with liability.
Nothing to do with liability. So surety is another word for bonding. And that bonding is a lot of times required by the state or the county or whatever the municipality is that you're working with or through or who's overseeing the project.
Okay.
For the most part, yeah.
Yeah, and in that case, they will stipulate in the bid conditions you need to have a bond of a certain amount that's
correct.
There. Okay.
And basically, one big difference between bonding and insurance is that bonding will require an indemnification agreement.
Okay.
Okay. With business and insurance, the entity, the business, is what's on the hook.
Okay.
But with a bond, you're usually personally guaranteeing behind that.
Oh, okay.
So what happens is if I'm going to do a job for the state, they say, okay, this is going to require $100,000 bond. Okay. I will bond it with my personal financial strength, and I will have myself, and because I'm married and it's a communal state, my wife will have to indemnify as well.
Wow.
So that if I don't perform on this job, then what happens is the bonding company gets filed upon, and then they will step in and they will make sure that the job gets taken care of and built at no other expense to the state. Okay.
Yeah.
So the bonding companies take a really big risk.
It is a big risk.
It is. It's a big risk.
Okay.
So the underwriting process with bonding is very, very intensive. Financials, personal financial statement, sometimes tax returns. And if you don't qualify because you don't carry the financial strength with you, you will not get a bond.
You won't get a bond. Okay, interesting.
Yeah. People say, well, I gave you all the business
So
information.
bonds aren't guaranteed. Anybody can qualify for insurance pretty much, right?
No, not anybody.
Not anybody.
I mean, there's an underwriting process, but it's much easier.
Okay.
It's far more stringent to get a bond than it is to get a regular
policy.
a regular insurance policy.
So like a general liability business policy, are there times where that's not extended to a business?
It all depends on who the named insured of the business is. A lot of times you'll have entities that are owned by other entities. And so we will call what's a named insured would be who is the owner of the policy.
Gotcha. Okay.
So if you own a business and you also own another business, but that entity owns both businesses, a lot of times we'll name all three.
You'll name all three.
Policy.
Okay, that makes sense. That makes sense. So are bonds typically cheaper than insurance?
Typically they are, yeah.
Because the more of the liability rests upon the person.
Well,
ultimately,
not always, but
not
sometimes.
Always.
Okay, it's a different scenario each time. So the expense of an insurance policy is based on the risk that's being transferred. Okay, and there's a rate, and if you manufacture fireworks, okay, you're going to have a very high rate of insurance. Than if you are a barber or you have an ice cream shop or something very Main Street. It's a little bit different. So, but a bond is much more intrusive. It's much more depth.
So
they go much deeper.
So prepare for that.
The underwriting process is different. The cost usually runs, now it can be based on your credit score. A lot of times they pull credit. They check to make sure that if they're going to extend to cover you on this, that they're going to be able to recoup
it if they need to. Okay.
Exactly.
Is there a credit threshold range typically? I mean,
there is.
We ask banks this, and usually it's, if you don't have a 650 credit score, you're probably not bankable for a traditional lender.
If you have a 650 credit score, you're not going to get bonded.
You're not going to get bonded. You need to have higher. You need to be closer to 700.
You need to be 700 plus.
700 plus for bonding. Okay.
Well, it's based on financial strength.
True.
Okay. It's based on your history. If you pay your bills.
Yeah.
And that's where bonding gets a little tricky. It is cheaper than insurance typically. Usually a payment and performance bond runs anywhere from 2 to 3%. Obviously, if your credit is a little bit less, if you're still bondable, you'll pay a higher premium.
It can cost you a little more. Okay, that makes sense. Just like if you're buying a vehicle or something for the business and your credit's a little subpar, you're going to pay extra at the.
Well, and that's the difference when you're buying a vehicle for the business and when you're buying a vehicle personally.
Personally too,
right?
Yeah.
It's different. And one thing you should know, because there are a lot of businesses that have a driving aspect to their business. And a lot of business owners want their businesses to pay for their vehicles.
Yep.
Which is okay. But a commercial auto policy is far more expensive than a personal auto
policy.
Yeah, I mean, you're going to carry a higher limit for one.
Yep.
So at our agency, we have a rule that we don't write a commercial auto policy that has anything less than a $1 million general liability limit, because if it's less than that, we feel like our clients are underinsured.
They're underinsured. Yeah.
We can write them, but you will sign a special waiver that says you've been communicated to and that you're buying less insurance than we're recommending.
Gotcha.
And that kind of covers us on the E&O side.
Yeah.
Right?
True.
So business is all about covering your butt sometimes, and so even insurance you have to.
Even insurance you have to do.
Yeah.
Well, any horror stories that you can share with us?
Dozens
about somebody that maybe where it just maybe it saved the business owner from impending doom.
Well, it almost always saves the business owner, because if the business owner has vehicles, typically, I mean, everybody gets in an accident.
Yep.
I mean, these attorneys especially in Las Vegas, wouldn't have jobs if it weren't for
accidents.
Right?
Yep.
I can tell you, I've had clients that have rear-ended somebody, and before anybody can show up, there's an attorney knocking on their window going, "Here's my card. Call me.
Give me a ring.
Doesn't your neck hurt?" And it's a very adversarial relationship between personal injury attorneys and between insurance underwriters, adjusters, and agents.
Absolutely.
Everybody's pointing their fingers in different directions. There have been some horrific situations out there. So I have a client that owns multiple shopping centers in town. And they had, this is a few years back, they had a person that was visiting their shopping center and was pulling out onto one of the main roads. And there was a gentleman on a motorcycle that was doing 80 miles an hour on the motorcycle. And
so he was speeding.
He was speeding. And he rear-ended the car and lost his leg as a result. It didn't kill him, which he was very lucky. And sometimes those claims can be more expensive sometimes than if he had actually died on the scene. Yeah. And so, anyways, his attorney argued that the hedges were too tall, even though he was speeding. And so when the car pulled out into traffic, he didn't see them because they were liable for the hedges. Okay?
Wow.
And keep this in mind. When you buy insurance, you transfer the risk to the insurance company, or in exchange for premiums. Okay. But with that, you're also transferring your right to really have any say in the matter. Okay.
Yeah.
They make the decision whether they're going to
go to court or not.
I say they, I mean the insurance company.
Yeah.
The insurance company controls whether or not they're going to settle, whether they're going to fight. And a lot of times they make business decisions. And those business decisions are such that we feel that this could cost us a lot of money to fight in court. We would just as soon settle for this X amount of dollars first. So they got brought into this lawsuit. The car that left the shopping center was carrying lower limits than I would recommend. And so once those limits top out, that's it.
That's it. You're done.
Yeah. And the attorneys are looking for any way they can to get the most amount of money for their clients, which is what we do, right? We all do this.
Yeah.
And so my client was told by their adjuster that we feel like we could potentially be joint and severably liable. Okay. Wow. And joint and severable means they're tied together by the other insurance companies. There's more people there, right, involved. And they said we could potentially be on the hook for $5 or $6 million based on mediation. So we're going to settle out, and they've accepted $300,000.
Wow.
And they were guilty of nothing.
Of having beautiful hedges.
Having their hedges be too tall for an 80-mile-an-hour motorcycle to judge his speed.
Exactly.
So, I mean, it's kind of awful, but this is the world we live in right now.
It's true.
People, I try to talk with my clients about ways to manage their risk as best they can. And some of those ways include safety measures.
Sure.
Everybody's been in an accident, and some have been their fault and some have not been their fault.
True.
Right? So I make a suggestion that if you want some cheaper rates, I would invest in onboard cameras in your cars. I'm in the process of putting onboard cameras in my cars in my household, just because
in case.
I've seen too many videos of somebody trying to cause an accident.
Absolutely.
Or somebody says this is what happened, and that's not really what happened.
He said, she said, until you see the video.
Yeah. At the end of the day, when there's an incident, a traffic accident incident, just because the police write a ticket does not mean that's what determines guilt.
Final.
Yeah, it's not. You could be guilty of something, right? What happens is the adjusters from the insurance companies usually get together and they say, okay, here's what happened. Here's the facts of the case. I feel like we are X% liable. We feel like you are X% liable.
Sure.
Sometimes that turns out to be a 50-50 situation. And unfortunately, there can be lazy insurance adjusters that work out.
Sure.
And they don't do their job well enough to make sure that all of the facts are considered.
Okay.
They're dealing with thousands of accidents on a regular basis.
Yeah. Sometimes you just have a backlog. You got to get through them.
Exactly.
How quick does insurance kick in? So say I'm a business owner, I call you up and I go, okay, I need a general liability policy and I need a bond. How long does that process take to go through underwriting?
Well, it kind of depends on how intensive it is.
Okay.
You know, I have some clients that it is a very intensive process. We have to check. So there's pieces that make up an insurance policy. Okay. And a lot of it is rated on a couple of different factors. Usually it's sales.
Okay.
Or it's payroll, or it's a combination of the two. Sometimes it's the square footage of the area that you're working in. A lot of times we'll see restaurants or ice cream shops or whatever that are rated based on their square footage.
Or a warehouse or something like that.
Yeah, I mean, if you're transferring your risk to somebody else, how does that person really know
how do they
what
assess it?
They're up for? Yeah.
Yep.
So by determining the size of your business, it's going to be sales.
True.
How many employees do you have? How much in payroll?
Yeah.
You know?
How big is your risk then?
Exactly.
Yeah.
So we call those exposures. Okay. And that exposure, and these are terms that we typically only use in insurance, and they tend to mean different things than in the normal world. But what I try to do is I try to work with my clients and educate them on insurance and how it works. I was a business owner before I became an insurance agent. And I had a broker who sat me down and he said, listen, you got to know this, you got to know this. And I learned some very expensive mistakes over the years. I had one lawsuit where we were a contractor and we built a school here in Las Vegas. And we did the grading for it. Okay. So we didn't build the school, but we did all the earthwork. And the school district bought a piece of property and we won the bid and we started building on it. That school required us to import 300,000 yards of dirt.
Wow.
Okay. It was like a low spot in the valley and it had to get raised up. Well, in 2000, I want to say 2002 or 2003, we had the 100-year flood.
Yeah, I remember that. Yep.
And it was kind of awful, right? So in the 100-year flood, the water came sheeting across the land, and normally it would have went south across the land and fell into the drainage channel and went down. Well, we were building. We were raising it up. We were building our job as required. As it was designed. We don't design the jobs. We build the jobs.
You just build it. Yeah.
We just build what the architect draws, right? Well, it came across and it hit our dirt and it went south. It went east instead, and it went into condos. There was a condo job, right? Well, they had a contractor there that had put some filter fabric over the drainage system. And the filter fabric is a way to keep pollutants out of our water system. Because everything drains out to Lake Mead.
Absolutely.
Right? It keeps debris and things out of there. Well, the debris collected, covered it up, made a lake, pushed the wall over, and went into the units, and it caused what they called was about $400,000 worth of damage. Okay. Well, we got sued because we did the job.
Yeah.
The general contractor got sued because they hired us to build the job.
And the school district probably.
And the school district got sued, right?
Because it's their site.
Yeah, it's their site. So we go into mediation, and our insurance company was handling it, and we were working with them all the way along. We gave them all the information, and I was feeling really good. I was like, oh, man, we've got a hydrology expert. We've got all the plans.
We're sitting good.
I've got all my information. Like, this is easy, right? So we sit down, we go through everything. We gave our testimony, my partners and I, and the hydrology expert, he gave his testimony. And our insurance adjuster turned to us and he said, thanks for your participation, guys. We've got it from here. And I was like, we're winning this. Like, this is a good deal. Like, we didn't do anything wrong.
Yeah.
Right? Just because you didn't do anything wrong
doesn't mean you're liable.
Well, and here's my opinion of the legal system. Somebody's getting paid.
Of course.
The attorney's going to get paid, and usually the claimant is going to get something. Okay. And so anyways, I got a call a few days later, and they said, hey, I just want to let you know we settled the case for $100,000. And I was like,
you're like, what?
$100,000?
For what?
Yeah, for what? What did we do wrong? And they go, well, you didn't do anything wrong.
Yeah.
But this is a cost of doing business.
Yeah.
Right? So I had to pay a little bit higher insurance for a few years until it fell off, because we have a look-back period of 5 years as a broker.
Gotcha.
The insurance companies look at 5 years.
So you go back. Okay.
And they want to know what it's called, your loss history. They want to know what your loss history is. And if your loss history has some payouts that...
Your premiums are going to be higher than moving forward.
That's
just like if you have a car accident and you've had claims.
Exactly.
Your insurance premiums will be higher.
Yeah. So we have what's called a loss ratio, and that loss ratio is how much did the insurance companies over that 5-year period pay out versus how much did you pay in premium. And if they're lopsided, you may not be eligible to buy insurance.
Okay, so in this particular contract you were in was with Clark County School District, right? So when you're doing business with a municipality, there will be bonding requirements that have to happen. There will be insurance requirements that have to happen. Even in my business, every time I set foot on a job site, I had to have $1 million rider just for that particular job site, just to drive my truck onto the site.
That's right.
And that was just what they required. In order to do any work on the site, I had to have that.
That's correct.
And it's the same way, right, when you're working with a municipality.
That's right. So the municipalities will have, they'll have requirements that they want to be met, okay? And it'll sometimes be job specific, okay? And those requirements will have a list of things that you have to have. You have to have workers' compensation. Mm-hmm. You have to, which is by law, you have to carry it anyways. And people say, well, it's just me. Okay, well.
Doesn't matter.
They don't care.
No.
They don't care. You meet our requirements or you don't do the job.
I worked with a company that they did some surveying work in the desert before they built freeways and roads and things. Mm-hmm. So we have protected species in Nevada. One is the desert tortoise, right? So they would have to hire the turtle guy to come in for like 1 week a year maybe to count and move and whatever that they have to do for a highway or a road. Now think in the middle of nowhere, middle of Nevada, they're doing this. Mm-hmm. And so they literally could bring the person on, but they'd turn on workers' comp for this person for the 3-4 days to a week that they're there. And then once they're done, they turn it off. That's another thing. People don't realize you can turn insurance on and off.
You can. And one of the nice things is we talked earlier about how insurance is rated based on your exposure. Now, if your exposure goes up, you're going to pay more in insurance. Okay. But here's the trick. Most people don't realize this. Almost all policies are auditable. Okay. So at the end of the policy term, you're going to get a notification from your insurance agent, the insurance company, and they're going to say, tell us what your exposures are.
Tell us what your exposures are. It's all about exposures, right?
That's right.
That's
all about exposures.
That's really what it is.
And if your exposures have gone up, you're going to have what's called additional premium come due.
Okay.
Now, adversely, if your exposures go down, you're going to get a credit back.
Absolutely.
Okay. If you didn't land jobs you were expecting to, or if you, COVID hit, right? We did a lot with COVID where people were paying their insurance and then they couldn't have any employees come to work.
Yeah.
So what we did is we went in and we lowered their exposures for their payroll, and their workers' comp cost them much less to keep in place.
See, now stuff like this is why it's important to have an insurance broker as part of your team.
Right.
You want your attorney, your CPA, and your insurance person.
Exactly.
I mean, that's really what you want. Yeah. And as we talked about, Brandon, just you work with attorneys and CPAs on this stuff, because quite often, if you're participating in a bid situation or something, you have to have your legal documentation done. You have to have your financial docs done, but you also have to have your insurance docs done.
That's right. And every contract has it in the section.
Wow. So
every contract has it.
So you have to make sure you dot all your I's and cross all your T's with that. So I think that's pretty amazing. And everybody gets sued at some point. If you're in business and you haven't been sued, it's almost like you might be doing something wrong.
or you're extremely lucky.
Or you're just lucky.
Yeah,
that's right. Yeah. That's right. Like I was telling somebody, we got sued in our business 8 times in 8 years.
Wow.
And I say 4 of them were legitimate. We had a problem, right? And we said, sue the company then. We'll work it out in court. 4 of them, though, were completely frivolous lawsuits. Frivolous lawsuits. And in one, the lawsuit alleged that we couldn't buy wholesale. That's literally what the lawsuit said.
Really?
Yeah, we got in trouble for buying some product from a company that hadn't paid the original creators for the content. We were buying some prints of a certain type of artist. They hadn't paid the artist
it was a copyright situation.
It was a copyright situation, but they alleged we conspired with them to buy at a wholesale price, so we were then defrauding the artist out of money. And it's like, we just bought prints from these guys.
And the sad thing is about that is, in all honesty, I'm going to bet that the attorney made more money than the artist did.
Probably.
Yeah.
Probably.
It's typical.
Well, and we got named in the lawsuit with 12 co-defendants, including Disney Company and a former President Trump's company. Right. And it's like, I remember making the call to my attorney and going, this isn't fair. it just isn't fair. We didn't do anything wrong, right? We didn't do anything wrong. And he said, it's okay, Mike. We'll, I'm licensed to practice. We got sued out of Chicago. So he's like, I'm licensed to practice in Illinois too. So no problem. I go out there. I'll probably have to go back and forth 2 or 3 times. Here's my per diem rate. You're going to have to pay for my hotel and my airfare and all that. And then, I bill out at $300 an hour and this and this and this. And I'm like, so we're going to, and he goes, yeah, we're going to settle, Mike. That's what we're going to do. I said, we didn't do anything wrong.
Yeah.
And he said, doesn't matter. So we ended up settling.
So, and like I mentioned this earlier, it's my opinion that the legal system is geared to pay money.
Yeah.
Okay. Whether it pays it to the attorneys or whether it pays to the actual
the attorneys
people who are
always make money.
Well, and look at our judges. Okay. Our judges used to be attorneys in almost all cases.
That's
right?
where we find them. It's the it's the minor league attorneys and went up to the majors.
And unfortunately, the insurance company collects premiums. Okay. So they're the ones who are going to pay. Right.
Yeah. It's true.
And it's awful, but it's the reality we live in. Okay. It's a cost of doing business. You're going to have legal fees.
Now, there was a case here in town of somebody who owned multiple apartment complexes. There was a fight that occurred. There was a drug deal. It was a drug deal that had gone outside. Neither of these 2 individuals lived at this place. They ended up fighting over. So it was an illegal transaction. They ended up getting in a fight, and they jumped the fence into the property. So they were trespassing, illegal activity, and fighting.
Right.
The one guy got stabbed. He didn't die, but he got stabbed. So he sued the apartment complex and said, I wouldn't have gotten stabbed if the fence was higher, if lighting was more sufficient, and you had a security guard.
Right.
And so they won in court.
See, that really surprises me. I mean, he may have won, but here's the deal. Is the people who are actually going to pay out on that are going to be the apartment complex.
Yeah.
Because in almost all cases, insurance does not apply if law is broken.
Exactly. And so he had to end up selling one of his apartment complexes to pay for the damages that the jury awarded to the criminal who was injured.
And this is why we have the protection of an entity.
Yeah.
Right? So that you have an entity.
That's why you have an LLC or a corporation.
Yeah. An S-Corp or whatever. Yeah. You don't want to be personally liable for something.
Exactly.
Okay.
As long as you stay one step away from...
You got to have layers of protection.
You do.
And the more successful you get, the more layers you need to have.
Absolutely.
And in talking about that, you mentioned earlier personal umbrellas. If you don't have a personal umbrella, you are selling yourself short.
You definitely need one.
You can buy a personal umbrella. I mean, now it depends on how many cars you have and how much you have to lose. But in most cases, you can buy $1 million personal umbrella for a few $100 a year.
So it's a cheap investment into your future.
Well, and an umbrella works this way. It takes the limits that you already have and it raises those limits by however much you purchase. So if you have a 100, 300 limit on your auto policy and you buy a personal umbrella on top of it for $1 million, you now have a 1.1, 1.3 million limits.
Nice. Okay.
So if you're in an accident and God forbid somebody dies because of that accident and you're found at fault at any point in time, and let's say the payout is going to be your bodily injury limit is $100,000. Okay. $100,000 can get eaten up really fast.
Really fast. And I mean, think about it. If you have a building and you have your business at your building, and let's say you picked up your kid from Little League practice and he brings his friend with him, and you go into your office and you happen to be in there and a shelf falls over and hits the kid and hurts him.
Yeah.
Okay. That 100,000 could be gone like this.
Oh yeah.
Because that is a very
well, and the difference would be is you're in a business. Okay. So your business insurance should cover that,
kick in.
Not your personal insurance. Okay. And the business insurance would, if you only had $100,000 limit for your business,
yeah, you're doing something wrong.
You need to fire your broker.
That's true.
Yeah. I tried to market myself as a trusted advisor. Okay. I'm here to help you. I am not here to just make money off you and never talk to you. Okay.
So you're not like my attorney when I call, I don't get a bill for $150, or my CPA for I don't get a bill for $75. You can actually call your insurance broker and say, Brandon, I got some questions, man. What if we did this, or what if this happened? That's what you're there for.
And I do that every day.
Yeah.
Every day I field calls, usually from clients that I already have, and they say, here's a situation. what do you think? How do I work through this? And I'll give them my advice from an insurance perspective.
Okay.
And I say, you need to talk to your attorney and you need to ask them legally what to do. On top of that list, CPA, attorney, insurance broker, I would say HR advisor.
Advisor, yeah.
There's a type of insurance which is extremely important if you have employees called employment practices liability. Okay. EPL insurance will cover you in the event of sexual harassment, wrongful termination, or discrimination lawsuits.
Which you can get filed at any time for any reason.
At any time for any reason. If you have an employee and you don't have EPL coverage, you are going to find yourself in trouble at some point.
Okay, so we need general. So if I have a business, it's just a typical business, I'm looking at general liability, potentially some bonding if I need that.
If it requires, a lot of companies don't have bonding.
Okay, you need E&O for errors and omission
if you're
a professional basis.
Correct.
And then, as you said, with this, some HR insurances too, as well.
EPL, employment practices liability.
Employment practices liability. Is there anything else you would generally consider for somebody?
So the next biggest thing would be called workers' compensation.
Workers' comp, okay.
And you are required by the state to cover your employees while they're at work.
Yep.
Wherever that is. If they work in their home, if they're out knocking door to door in a sales capacity, or if they're at your location, they need to be covered.
Yeah.
So,
and what typically happens is you pull your buddy on to help you out, do some stuff, even if they're a volunteer.
Right.
Okay. Even if they're a volunteer, if they get hurt in the line of duty, the hospital asks them, how did this happen?
Right.
Well, I was working. They don't say I was an independent contractor doing my own thing over here. No, they don't say that. They say I was working for Mike.
Yeah.
And Mike sent me out to do this, and then they look you up. And
well, and a lot of times what will happen is they'll ask how you were injured on the forms you fill out. And if you say work, or if they say, they'll ask you at the hospital or at the doctor's office, did you get hurt at work? Because their rates are different than if they are for your medical insurance, right?
Yep.
Because they're going to go for the gusto, right? These doctor's offices don't get paid on your $25 copay.
No, exactly.
Right? I mean, they do, but at the end of the day, there's a negotiated rate with the insurance companies, but with workers' compensation, there's no negotiated rate, right?
So it could be whatever they want.
Well, whatever's reasonable.
Whatever's reasonable.
Yeah.
But still, that's way worse than a negotiated rate.
It is. And unfortunately, there's systems out there, and people have learned how to work through the workers' compensation system to take advantage of it.
Yeah.
And it really can. I've seen it kill companies.
Wow.
Yeah. So I have one client that is a masonry contractor. Okay. And for years they would build block walls. They did mostly block walls in between houses. Everybody's got block walls in between their houses, right? And he would have the guys use a wood pallet that the blocks came on as their ladder, right?
Okay.
And they would walk up the pallet a couple of steps, and they would do the wall when they needed to reach that higher level, right? And they would lay until they couldn't reach anymore, and then they would move down, And my guys, he had an inspection one time, and we had a loss control person come in and try to help him find ways to make his job site safer, give him a better OSHA rating, keep his losses down. So he bought a really long scaffolding system that was only like 2 feet high. Right?
Okay.
So he had guys on there, and they weren't used to just keep laying, right, all the way to the very end. They would have to get down and move. Well, anymore, they could just lay. And he was going to make his guys more efficient, and he was going to build walls faster, hence make more money.
Yeah.
Well, he had one mason that got to the end of it, and he turned and fell off of it.
Fell off the scaffolding.
Fell off the 2 feet.
2 feet.
Fell 2 feet off the scaffolding, broke his wrist, had to have surgery, ended up with a PPD award, a partial permanent disability award from the insurance company.
That sounds expensive, Brandon.
$65,000. Yeah. $65,000 because the guy fell and broke his wrist off of a 2-foot scaffolding that he put in place to try to help make his guys more efficient and be safer.
Be safer.
Yeah. Yeah. So, I mean, we try to put these things in place to help make our lives easier. And at the end of the day, you're working with people, and sometimes people are dumb.
And people make mistakes.
People make mistakes. They do.
Sometimes people fall off a 2-foot scaffolding.
Yeah. So what he had to do, he had to start having safety meetings. Okay.
Yeah.
Then he had to put like some flagging at the very end so that guys knew when they were at the end to step off and not fall off.
It sounds funny, right? But that's just how it is.
It's funny to say, but it's not funny when your experience modifier goes up with your workers' comp. And now you're paying a premium because you have losses.
It reminds me of the OSHA safety belt that you have to have on you at all times when you're on like a scissor lift or something, right? The amount of times people used to never put those things on is ridiculous, right?
Right.
But if you get caught without that on, that can be a very hefty fine.
And that's why they make them hefty.
Hefty. They want you being safe and wearing them.
That's true. That's true.
So, and at the end of the day, I would say just about every business owner wants their people safe, right?
Oh, yeah. I mean, who wouldn't, right?
Yeah.
You don't want to be responsible.
You don't want to hurt your employees.
For somebody hurt. Unfortunately, there are unscrupulous people out there who take advantage. And
that's why I said almost everyone.
Well, and that's why you need to have an HR system in place so that you interview people, you pre-employment drug test them, and you check their motor vehicle records before they drive a vehicle.
Absolutely.
Okay? Because what will happen is, what if you hire somebody that had a DUI within 6 years?
What if they run into it? What if they hit a kid in a crosswalk?
Even worse,
right?
Yeah.
And you didn't check to see if they had a DUI.
Yeah.
And they were drinking at the time.
Right.
All of a sudden, this case goes from this is just an unfortunate incident to now the business is very much liable for this.
Absolutely.
And
I'll tell you what can happen as well, because a lot of people will hire an employee and they won't notify their broker that they hired somebody that is now driving a vehicle. We do this every year at renewal time. I'll say, hey,
who's driving what?
Where's your vehicles? I need your list of employees, because we provide the service of pulling the MVR from the DMV.
Oh, okay.
And we go, okay, here's
so you check them all and make sure.
Well, we do. We check them and we say, you need to approve these drivers.
Have you had some crazy results that come back and you have to inform the business?
All the time. Well, because what will happen is they won't notify us when they hire an employee. Who thinks I'm going to call my broker and tell them? Well, if that person is going to drive in their capacity of employment, they need to be added to your policy. And if they are ineligible because they have a DUI or a suspended license or one of a dozen things.
It could be a bunch of things, yeah.
And there's a claim, the claim will not be covered.
Wow.
And that could really
mess you up.
Yeah,
okay.
Yeah, it could.
That makes entirely great sense.
It does.
Let's see. I had another question on bonding. Is there any other type of bond that you can think of that we haven't talked about?
I mean, yeah, there's all kinds of bonds. For the most part, things can be picked up by a miscellaneous bond. I mean, it just depends on what's being asked for. Nobody is going to go bond just because they want to.
You just don't get a bond to have a bond. Somebody's asking for a bond. Correct?
That's correct.
Okay.
That's correct. And a real common one, and we talked about this earlier, is a notary bond. Okay, notary bonds can be very cheap. I think they cost about $100 or $110. And that way you can go through the class and have your notary, and you can be able to sign legal documents for in your course of business. Those are very inexpensive. We sell them all day long. There's also bonds for offsite improvement bonds. That's more of a construction related bond.
I know there's cleaning bonds that come through quite
often.
often.
There are cleaning bonds. There's all kinds
of performance bonds.
Yeah, performance and
surety
payment
bonds.
Well, a bond is surety.
Okay.
So those are synonymous terms. But bonds are, whatever you need, it has to follow the form that it's written on.
Okay.
So a lot of times, if somebody says, okay, I need this bond to operate in this capacity for whatever municipality, usually they're tied to municipalities.
Okay.
Municipalities always require bonds.
Gotcha.
Okay. They want to know that you have the financial strength to do the jobs that they're asking you to do.
Gotcha. Okay.
And those bonds will be written on a specific form. In fact, Clark County will ask you, it has to be written on their form.
On their form.
Yeah.
Interesting.
And so you will pick up a bond packet from the county and it will have a certain color sheet, because you can't just make a photocopy of it. It has to be on their paper.
Their paper.
And it's numbered.
It's original.
It's original.
Okay.
So yeah, and it has an embossed number on it. So
interesting.
Yeah, I mean, bonding can be really tricky, but if you have the right professional, he can guide you through it without a problem.
That's interesting. Well, great information today, Brandon. Is there, if you could give a business owner that just says, boy, I'm really clueless with insurance. You know, is there any final word to say, here's something you really need to do, or you really need to what should they focus on? You know,
having a good broker.
Having a good broker.
Yeah.
Pick a broker.
If you don't talk to your broker more than once a year, you're not getting out of them what we're paid to do.
Mm-hmm.
And most of the times, our commissions come from the insurance carriers. We don't, only unless in certain circumstances will we charge what we call an agency fee.
Mm-hmm.
We don't. I never charge those.
So your clients don't even have to pay you. You get paid from the insurance products.
Right. That's exactly right.
Which is great.
Yeah.
And one of the things I've always recommended brokers for business owners, because you need different types of insurance, and you can't just go to the place where you're getting your car insurance for your personal done. They probably won't have what you need, number one.
True.
And number two, you need somebody that understands the business side of things.
Exactly. So you need someone who works in the business industry.
Absolutely.
And that's
what you do.
Yeah. Proper.
Okay.
We are business agents.
Okay. Well, where can we find you at Schwartz Manning?
So we're in Summerlin. You can reach us at schwartzmanning.com. We've got some other special industry programs that we have affiliated with us that we work like in the cannabis industry.
Okay.
Which is very, very hard to insure, by the way.
Absolutely.
So you really want to have someone who knows what they're doing in that industry.
Okay.
Because you'll lose a lot of money.
Yeah, there's a lot of liability.
My goal, if you don't talk to your broker more than once a year, you're hurting yourself.
See, that's
and if he doesn't answer your call,
get another
or
broker.
call you back in a day or two, what are you wasting your time for?
Yeah.
Yeah. I talk to every one of my clients all the time.
All the time.
And they all know they can call me on my cell phone, and I will pick up or call them back if I'm helping do a podcast.
Yeah. Well, thank you for being here with us today, Brandon. What's a good number they can reach you at?
You can reach us at 702-878-2028.
2028. And it's SWARTS Manning, MANNING.com.
Yep. schwartzmanning.com.
All right. Thank you, Brandon. And once again, this has been the Biz Life Podcast. I appreciate you being on the show with us today.
You're welcome.
Thank you for all the insights and information and great stuff for small business owners. So thank you.